Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, December 26, 2019. So as we resume the trading week, of course, we had the stock market close yesterday for Christmas and closed early on Tuesday. Just want to do a quick update. Not really much new to report. Same old. Nothing different from the last update. We had SPY and IWM cracked below those 60-minute trend lines, but without anything remotely close to impulsive selling, and more importantly, the leading index, QQQ, because the market is mostly technology nowadays, about a 50% weighting in the NASDAQ 100, and it's still the largest sector in the S&P 500 at about 1/4% of the weighting. And so we still have QQQ above trend. That's the purple trend line here. Remains above trend now, so we don't have any sell signals. The market just continues to work its way higher. So this is what we're watching. This is, to me, probably one of, if not the most important levels, would be this trend line. You can draw it that way. I'm thinking that's that spike didn't happen today. That's a erroneous print, that long candlestick tail. So let me just put the line back to where I had it there, or we can put it down there. It doesn't matter. Close enough. You need to see an impulsive breakdown below there. Otherwise, we continue to grind up. And I put a secondary level here, a little minor support level there to watch, and that's right at about 211.43, 211.37 or so maybe. And again, if and when that sell signal comes, minimum pullback target, we're going to test this gap right here. That's the gap from Monday, December 16th. The top of the gap is a little lower than that, but there's where the support is, right there, about 209.11, a little north of 209. And there's a good chance I'll backfill that gap at minimum. That's about 207.46. So if and when we get the sell signals via the break of the trend lines here, let's look at NQ. This is NQ. We just continue to move this little DH symbol, which means divergent high up. You can see it just extends the divergence line. And right there we have pretty much, we've almost equaled, we slightly exceeded that previous high right there on the RSI, but we're at that 87 extreme overbought level again. There's the divergence line still intact on the PPO. And so what I'm talking about here is this red line here. There's a tag of that level there. It's 86.72. It's a somewhat arbitrary line. In other words, that's I don't have the standard 70 overbought reading on here. This is an RSI 9 setting on the 60-minute chart. And again, you can just see what happened when you hit it, especially with a series of divergences there. That was the last time we had it. Well, 3 consecutive divergences. We had extreme overbought reading right here, followed by a divergent high, meaning you come up, push back up, become overbought again, but a little less overbought. That's what gives you the divergence, and so far that's what we have here. So there's your divergences, but again, divergences are not they are not sell signals, neither are overbought conditions. They're merely indication that pullback's likely. So what you need is a trend line. And I've extended, we had a couple smaller trend lines, and this is the one in play right now. Comes in 1, 2, almost there, 3, several reactions, and that's NQ E-minis. And here's a quick look at ES, the S&P 500 E-mini future. Similar story. Here's your trend line, comes off. That's the December 3rd lows right there. You capture that 1, 2, 3, and these recent reactions. So 4 distinct reactions there. And so even though I had it on SPY, I had us a little bit below. This is the current trend line to watch, if you will. We had this one last week, but we kind of limp below there. And again, with the NQ and QQQ still holding up, that's what you have as a pretty resilient uptrend. But it hasn't changed anything from a technical perspective. You still have the RSI and PPO divergence now, and still what I call potential divergence. We can keep moving this line up, and as long as it remains below this prior peak, that will keep the divergences intact. Anything more and they get burned through. So that's that. RTY, small gaps, that's what it looks like here. Let's zoom in a little tighter there. You can see the trend line right there. Let me tighten that up just a hair to come in and catch these distinct reactions. So Again, levels I'm watching, and when you're in an uptrend making new highs, there's really nothing to talk about above because you don't have any overhead resistance levels to note. So it's just an uptrend until it isn't. And again, if it breaks, we're looking at just relatively minor pullback targets right here, 1659. I think IWM will most likely outperform on the next correction when it comes to the downside. That's about a 1, now about a 1.3 to about a 2.3, 2.4% drop. 2.5% or so, depending on where and when we break down. That's just showing you from current levels. All right, so back to the charts of the ETFs. You have QQQ, again, most important one in my opinion, above trend. Until that breaks, the smallies and SPY aren't going to go anywhere. That's what it looks like on IWM. You had a breakdown, pretty red impulsive candle. So you wanted to go, but that's why I say look at all of the indexes. Even if you're only trading the small caps, you don't want to jump the gun because they'll only go so far without their big brothers and sisters, the large cap stocks, also breaking down. So that's it, and a little minor channel there. So target, let's see if that aligns with what I had on the futures. Yeah, it's about a 2.2% or so drop, so roughly down there to that 163 level. There's some minor support here that might come into play first. It all depends how and when things play out. So that's it. We can talk about this all day. Same stuff. Really not anything new to report until we get QQQ breaking down and we start to get some impulsive sell signals. And again, we're looking at these are the near-term pullback targets. Certainly the potential to morph into something more. So we'll just have to see if and when the next correction comes and we break these support levels down below. Where do we go? There's you can see there's a pretty solid resistance level here. If things get ugly in the next week or two to the downside, and that'd be about a 4% drop right there at about the 160 level. Let me make that a round number. It's so close. Anyways, let's just round that up and just say that's a target to watch. Same old, same old. The divergences just continue to build there. So that's it. There's not much more to talk about on the equity markets. You're in the holiday season right now. This is an abbreviated trading week, of course, with the markets closed yesterday and closing down early on Tuesday. And I really don't expect a lot of fireworks, but we want to keep our eye on these levels. The money to be made lately, gold, point out the breakout in gold last week, earlier this week. That's been running. Silver, energy stocks continue to be and still look to be one of the most bullish sectors in the S&P 500. So a lot better fish to fry elsewhere. With this market now, what is it? I think the S&P 500 is up 6%, about 6.5% in the last 7 months. Since this peak right here, we had effectively 2 equal peaks right here and here, and so that's we've gained about. In the broad market here, let me get the crosshair pop-up box in the left, about 6.5%. And all the way going back to 2017 right there, or the early 2018 highs, I should say, we've gained about 12%. It's funny how all the statistics will jump on the calendar returns year to date. It's a great year. All you have to do is move the needle. It all depends on where these corrections come from. We happened to bottom last year, December 24th, right there. And so you had, right after the year started off, most of the gains took place. And then we went kind of chopped around. We've had a nice run recently, but if you had just moved that needle, this correction, if it was moved back just a couple months, and then you'd be measuring off this target, and you'd have a gain of about 13% for the year. So again, what did I say? 6% for the year, and then things, like I said, energy. I highlighted this, one of the most bullish sectors, or the most bullish. No ambiguity. The most bullish sector in the S&P 500 for the last couple of months, and you can see this one alone has gone up. This was my favorite of the 3 XES in just a matter of a few weeks there, 1.2 months, 27% gains. XOP. Also similar story, second favorite here, and that's about 21%, 22%. And then XLE, the main energy sector. This is the component of the S&P 500, really, these stocks here. And just in the last few weeks, still respectable gain. In other words, this has done more than the stock market has done, even just XLE, which, again, I prefer XES and XOP, a lot more bang for your buck, as I just showed you, and they've still outperformed. So That's where it's at. There's plenty of money being made in the market, and the market is going up. Make no mistake about it. It's certainly in an uptrend, but it's kind of a slow grind higher. This is not a melt up top. I've heard that term thrown around. We may enter a melt up phase. This was a blow off top here. We went near vertical right there, and this is certainly a strong advance. But when you look back on the bigger picture, really doesn't appear to be a blow off top. At least not at this point in time. You don't see the volume climax or anything like that, a buying climax or anything. It's just a slow but steady grind higher. So that's it, guys. We'll watch those levels on the 60-minute charts. And like I said, better fish to fry elsewhere right now. And also keep in mind, this is the holiday week, so low volume, typically a low volume week, as will be next week. And so therefore, you want to take any breakouts with a grain of salt. You're more likely to see any breakouts fail. You have an increased rate of that unless they look really good. And again, members, I did an extensive video on gold, silver, and some of the mining ETFs like GDX and SILJ, and that's we have some longer term targets and some levels to watch there as well. But as of now, we'll wrap it up here, and if anything happens significant, I'll do a update tomorrow. If not, we'll just hold off until we see anything next week, anything significant to note, such as a breakdown on QQQ, for example. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.